Hello, Leeb Group viewers. Today is December 12th, 2010. So earnings season began with Alcoa reporting its results yesterday. Traditionally, it's the report from this aluminum giant and the Dow Industrials member that marks the start of the season, and this time the season certainly did not start with a high note. Alcoa earnings disappointed. The largest U.S. aluminum producer's profits trailed estimates. Despite strong metal prices, high energy prices were one of the main culprits. Higher energy prices also were behind the widened U.S. trade deficit reported for the month of November. The low dollar helped U.S. companies to sell abroad. The overall increase in exports was achieved for the 7th month in a row. The size of the increase, 0.9% to $138.2 billion, reflected increased overseas demand for food and American-made automobiles and semiconductors. Signs of recovery, however, are still few and far apart. The recently released minutes of the December Federal Open Market Committee meeting indicated that even the Fed isn't confident in the strength of the recovery. While members of the FOMC agreed that economic growth was strengthening and that downside risk to the outlook for economic growth had diminished a bit further, the securities purchase program was still a major discussion topic. A few FOMC members observed that in the future purchases may need to be expanded, while only one member of the committee saw enough improvements in the financial markets to warrant scaling back large-scale asset purchases. Clearly, we are not out of the woods in terms of economic recovery, not by a long shot. With employment to population ratio at a 25-year low, and aggregate hours of production have dropped more than during the 1981 to 1982 recession, we have a long road ahead. And with stock prices having recovered since last March, we are now at a critical junction. Banks still aren't lending to any great degree, and consumers aren't motivated to spend. So thanks for dropping by, and we'll see you tomorrow.